Hi, Michael. Haven't seen you for a while. How are you today?
Awesome. Happy to be back.
I missed you, man. Yeah. So listen, the first question is Bitcoin, expensive or cheap?
I think Bitcoin is the best investment idea I can come up with. So cheap would be the answer.
It's cheap. Okay. So do you buy Bitcoin only through MicroStrategy or do you own Bitcoin for yourself as well?
I own Bitcoin personally. I bought a lot of it. I bought $175 million worth of it
Okay.
back when it was trading in the 9,000 range.
Yeah.
And then I bought $250 million worth of it on behalf of MicroStrategy a while later in the 11,800 range. And then
Wow.
I bought another $175 million worth of it when it traded down. We doubled down in the low 10,000 range. So the MicroStrategy position ended up being 425 million at about
Amazing.
11,111 per coin. And my position ended up being 17,732 Bitcoin at 9,800 and something a coin. And I bought it because I couldn't find anything better to buy.
Yeah, yeah, I know. But listen, in the past, you were skeptical about Bitcoin, and you digged into the Bitcoin as topic in 2020. Was the pandemic, was Corona, COVID, was it also responsible for you for looking for another safe haven for your money, for your as a hedge against inflation?
I I was a big tech investor, and I think that in March of 2000 or 2020, I reassessed my views of big tech, and my conclusion was big tech is now a crowded trade. When Main Street shuts down and big tech doubles,
Yeah,
and the economy has a K-shaped recovery, then there's a delamination of financial assets from underlying economic activity, and that was a jarring change in reality for me. So I reassessed my view of big tech, and then I also reassessed my view of cash, because simultaneously big tech looked like a crowded trade, and the M2 monetary supply expanded by 24%, and I watched the interest rates go through the floor,
yeah,
and I watched bonds hyperinflate and the value of fixed income hyperinflated. So I saw hyperinflation of assets, no inflation of non-assets, and it caused me to reassess my investment thesis
sure.
about what would be a good store of value over the next 5 years.
Yeah. And we saw the central banks jumped in. The balance sheet of the Fed looks like a rocket ship, you know, it's amazing. It's exponential growth. What do you think about the economy right now? You think we see a V-shaped recovery or we're far away from that?
I think we'll continue to struggle with the after effects of the pandemic, and
Yeah.
that'll go on for 4 or 5 years. And I think
Okay.
that in those 4 or 5 years, we'll continue to do large amounts of fiscal and monetary stimulus, and we can expect the monetary supply, at least the broad monetary supply, to expand 10, 15, 20%. The debate is what, but call it 15% a year for the
Yeah.
next 4 to 5 years. That's what I expect will happen.
Okay. So you expect as well an inflation then, I guess.
I my view is inflation as used on public media is a misnomer. There's
Yeah.
a huge fixation on inflation as defined as a consumer basket of goods that do not include energy and food, the highly volatile energy and food,
Yeah.
and they do not include any assets. And so, if you define a market basket of non assets without food and energy, I don't think you'll get inflation, or you'll get very de minimis inflation, because the cost of streaming Netflix and YouTube videos and highly manufactured, standardized goods and services isn't going to inflate that much, because the fixed cost is high, the variable cost is low or zero. And so, you could print infinite money. That's not going to inflate. What's going to inflate is assets, right? The
Yeah.
cost of a bond that yields $50,000 a year cost $1 million in 2010. It cost $2 million in 2019. It cost $10 million in April of 2020. Going from 2 million to 10 million in 6 months is hyperinflation. You'll see hyperinflation in scarce, desirable assets. And that's what we're seeing right now. So I expect that if the money supply expands 15% a year for the next 5 years, you're going to see the value or the price of scarce desirable assets are going to go up at least that much or more. And I think that you're going to see the value of manufactured consumer goods with low variable cost and high information content. They're not going to go up. And the Fed and the central banks, they're not going to get any inflation if you define inflation as consumer inflation. They're going to get asset inflation. Yeah. And it's going to create this dilemma where if you're holding cash, you're going to lose half your wealth. And if you're holding fiat instruments of commercial real estate, bonds, or stocks, they're not going to store value very well because bonds have to yield more than the monetary expansion rate. And stocks have to grow their cash flows faster than the rate of monetary expansion. And how are you going to do that, right? It's just not like if you were growing the money supply by 5% a year for 10 years, which is what we did in the last decade, you might be able to get ahead of a hurdle rate of 5%.
Yeah.
But the hurdle rate's gone to 15%. If I triple the cost of capital, the hurdle rate, name me a bond that's going to yield risk-free 15%. Name me a risk-free equity that's going to grow its cash flows more than 15%.
Yeah.
Can't find it, right?
Not possible.
Okay, and so that leads you to a mad scamper for a store of value. And if I can't find it in a fiat instrument, and I know I'm not going to find it in fiat cash, I have to find some kind of liquid, scarce asset. So this is a time where you go and you buy that beach house in Saint-Tropez because you think that everybody's going to want to go to Saint-Tropez, or maybe you buy your Picasso, or maybe you buy something very priceless. You buy the jet or the yacht that you always wanted. Yacht probably better than jet because people don't fly as much, but yachts get a lot more use nowadays. So after you get through that, where am I going to find liquid monetary energy? And the answer is Bitcoin. Bitcoin is, in essence, crypto gold, 21 million virtual gold coins. You can't make any more. It's pharmaceutical grade synthetic gold. It's an engineered safe haven long duration treasury asset because you can't mine 2% more every year like you're doing with gold. You can't hypothecate it and issue a gold ETF that's unverified. You don't have any problem auditing it and verifying it. There's no CEO or company to regulate it or to control it. So you've got all the benefits of gold, none of the hangover of gold, none of the after effect negative problems of gold. It's harder than gold. And it's also smarter, stronger, faster than gold because you can build it into Apple Pay or Amazon. In fact, right now it's built into PayPal and Square. And PayPal and Square are selling more Bitcoin every week than the miners can possibly produce.
Yeah.
And they're going to and Square sold 1.7 billion worth of Bitcoin this quarter, up 100% quarter over quarter, 1,000% year over year. So when you start to build Bitcoin into mobile payment apps, you're going to drive huge amounts of adoption. And what is PayPal plus Bitcoin? PayPal plus Bitcoin is a mobile payment application with a savings account that yields 100% tax-free. It's been doing it for the past decade. So if I'm using PayPal and I'm sweeping my money into Bitcoin, then I've got a payment network.
Yeah.
I've got currency rails. And then my treasury account is accreting at 100% a year versus the dollar or versus the euro. So is that a good idea for PayPal? I think so. Is it a good idea for Bitcoin? I think so. PayPal's worth 250 billion. They've got 340 million users. Square's worth 90 billion. They've got 40 million users.
Yeah.
These tech companies are plugging into liquid synthetic monetary energy. And it's the only game in town. So is it a good investment? Yeah, it's basically the apex safe haven asset in a world where $250 trillion worth of money is looking for one.
Yeah. Do you have a diversified portfolio? Do you invest in anything else except in Bitcoin?
The company made the position to make Bitcoin its primary treasury reserve asset. So we have a little bit of cash and working capital accounts. We sweep the rest into Bitcoin, and we might, from time to time, buy our own stock, but we don't invest in anything else.
Okay. And as a private person, like, do you own
I have some legacy investments and things that are highly appreciated, that I maintain for personal reasons. And then I have some derivatives. I actually have 30-year swaps.
Okay.
Where when the 30-year interest rate got to 72 basis points.
Yeah.
And you could borrow money for 30 years at 72 basis points. I did that trade and I swapped that because I thought that there's no way that the long-term interest rate is going to stay at 72 basis points. But that might not work, but I thought it was interesting at the time. I mean, interest rates have moved up 60 or 70 basis points since then. So that's been a good trade for me.
Yeah.
But it's a very complicated trade. Most people can't actually do a 30-year derivative swap.
Yeah,
it's short. I'm short the 30-year sovereign debt.
Yeah.
So some things like that, but for the most part, I'm most enthusiastic about the Bitcoin.
Yeah, I see that. So, do you think central banks will go back to a gold standard, or will they introduce digital currencies, or will there be a Bitcoin standard?
I think that as Bitcoin grows, it'll be a appealing pool of monetary energy and an appealing treasury asset for a succession of organizations, and it'll eventually get to small countries and to agencies of countries, at the state, at the municipal, at the agency level.
Yeah.
And then it'll creep in to others, right? I don't know which one's first, but it's a very logical asset. It becomes more appealing when it gets to $1 trillion of liquidity, and then $10 trillion of liquidity, and then $100 trillion of liquidity. Right now, it's a really good fit for people that want to invest 100 million to 500 million as a treasury and maybe $1 billion.
Yeah.
And so you'll see a lot of billion-dollar entities, private companies, high net worth individuals, the like. And then I think that as it moves up, you'll start to attract $10 billion entities, then $100 billion entities, then larger.
What do you think about commodities? Like, do you invest in silver or copper, something like that?
My problem with commodities is you can make more of them. I think you should trade commodities. If you can produce them, you should produce them and sell them at a profit, so you can buy scarcities.
Yeah.
Scarcities are assets you can't produce more of that you love. Your family, your yacht, your jet, your home, right? Your Bitcoin. You cannot, things you're going to hold for 30 years. If you're going to give it to your son or your daughter, it's a scarcity. You should own it. If, on the other hand, who's going to save up a bushel of corn or wheat or nickel to give to their son or their daughter in 30 years? The problem with commodities is human ingenuity and capital can produce more. And gold and silver are the apex commodities, but still, you can produce them. If you were to put $100 million in gold for 100 years and the miners produce 2% more gold a year, you're going to lose 85% of your monetary energy. Right? Because they're going to double the amount of gold every 35 years. That's the best case. They're probably going to triple or quadruple the amount of gold due to something akin to fracking or new chemistries, or a smart hedge fund person is going to create a gold ETF that's fractionally backed 2-to-1, and they're going to hypothecate the gold and sell more gold derivatives or futures than there is gold, or someone's going to counterfeit the gold. And all those things happen. So I don't think commodities are a good store of value. You might be able, with leverage and derivatives, to trade in the near term with high frequency and make some money. But for the average investor, are you going to hold corn or wheat for 100 years? Are you going to hold coal or oil or natural gas for 100 years? The bet is human ingenuity is going to find a way to produce more of that thing. And here's the problem. If the price goes up by a factor of 100, you're going to attract massive amounts of capital and the smartest people on earth to produce more of that thing. So if you're investing in commodities as a store of value, you're betting against human ingenuity and capital and self-interest. And that's not a good bet. Normally that's the losing bet. On the other hand, with Bitcoin, if it goes to $1 million a coin, miners can't make any more. The only thing that's going to happen when it goes up by a factor of 100 is the security on the network is going to go up by a factor of 100. And by the way, and the value of the safe haven asset is going to go up by a factor of 100.
Yeah.
It's a positive feedback loop. It's reflexivity. The more people buy it, the more they're going to want it, the better it's going to be, the safer it's going to be, the less risky it's going to be, the more they're going to buy it.
Okay, so
you can't find that with a commodity.
Yeah, you know, the case for commodities is that people that we use it, that we use it for tech products, for mobile phones, for laptops, and so commodities will stay definitely on the radar for investors. And if we have a runaway inflation, people will look for a safe haven, and some of them look for commodities because people use it, people need it. It's limited.
Yeah, so I guess there are worse things to invest in than commodities.
Okay.
Right. So if you decided, you can probably come up with something which is even worse than a commodity. But the problem at the end of the day is that it's not going to accrete linearly, and it's not, the price of the commodity is not going to accrete with the expansion of the money supply and keep up with it, because it's not absolutely scarce. And as the price of the commodity goes up, the supply of the commodity will go up. The number of miners, factories, plants will increase. And as they increase it, they've got a vested interest to sell and drive the price down. So commodity producers are the enemies of commodity investors. Gold miners are the enemies of gold investors. And so that's the problem with commodities. You've got this tug of war of, is it a money, is it an investment asset, or is it a production? And ultimately, a lot of times with commodities, what happens is a government will go ahead and they'll invest in the commodity production and they'll run at a loss to generate cash flow. And that's the history. I studied commodities for many years. That's the history of all these commodities. Eventually you have a producer that's overinvested and they will run at a loss.
Sure.
As long as they have a cash margin, because the alternative is to shut down the plant.
Yeah.
And so those commodity producers are going to drive your commodity price into the ground as long as there's positive cash flow for them.
Yeah.
And so you really want to store a value. You want to own the Mona Lisa in a world where there's only one. You need to own something which is truly scarce, truly desirable. You can't make any more of them, and everyone recognizes that it's valuable. And that's why gold might be better than owning cash. It's up 30% or something, but Bitcoin's up 160%. And the reason why is because gold has a leak in the battery. It leaks. If you have a leaky battery, a leaky ship, then will it get you across the ocean? Crossing the ocean in fiat currency is like stitching together a rubber raft with a leak. And crossing the ocean in gold is like getting on a wooden ship that's going to rot. It's going to eventually rot and sink in 80 years. Crossing the ocean in Bitcoin is like getting on a steel container ship, steel hauled, and it doesn't leak. And there are all different ways to get to your destination. The issue is with what degree of monetary integrity.
Yeah.
Commodities will have more monetary integrity than cash.
Yeah, definitely.
But less monetary integrity than a pure synthetic crypto asset like Bitcoin.
Okay. What do you think about real estate? Would you invest in real estate right now?
The problem is half real estate is impaired.
Yeah.
Right. Like the amusement parks, the movie theaters, the shopping malls.
Yeah.
It's impaired. And so anybody's going to sell that to you is going to sell that to you with no use case at a premium. The other half of the real estate that's valuable has been trading like a bond. And as the interest rates went to zero and people refinanced that stuff at lower and lower interest rates, the cap rates went through the roof. And so it starts to look like a highly appreciated, inflated fixed income asset. And I think fixed income's at the end of the line because interest rates can't go much more negative. If interest rates can go negative, more negative, then maybe you can make that work. But I don't think it holds its value because you can't increase your rents at the rate of M2 monetary expansion.
Yeah.
No one's going to be able to do that. And theoretically, the entire civilization only needs about half as much commercial real estate as it used to have. Right? There's small shining lights, like maybe data centers, where there's increase in demand there. But what we've seen is a massive crystallizing collapse as part of the virtual wave, where a company with 1,000 employees now needs space for 300.
Yeah.
And people are working out of their home. And then the amount of retail storefront space in the U.S. has just been cut by a factor of 4. And we dematerialized a lot of real estate to the phone. It's like even with weddings and funerals, it's like, you're going to go to the funeral on Zoom. It's like, even cathedrals and churches are impaired assets as real estate. So there's a lot of impaired real estate assets. The rest is overvalued and it's not liquid.
So I would say you say no. Okay.
If you had a lot of money and you wanted to give it to your grandson 30 years from now, if you buy real estate, some politician may seize it or tax it.
Of course they will.
If you buy gold, it's going to be cut by a factor of 2 to 4 by gold miners and hypothecation. If you buy a stock, you got to bet that they can grow faster than the central bank can print money.
Yeah. So
you buy Bitcoin.
Yeah, you buy Bitcoin.
And you hold it. And when the government decides to change the tax law in Germany, you send it to someone in Florida, right? Or you move to Florida and you take your Bitcoin with you because you can't take your skyscraper with you.
Send me your wallet address later, please, for the emergency. So what about tech stocks? You're a CEO of a tech company. What are your thoughts of the current stock market valuation, or especially of the tech stocks like Google, the FANGs, Tesla, and so on?
I think you've seen a huge surge of monetary energy out of fixed income in search of a store of value. And the first place they went was big tech.
Yeah.
And they went to the things they knew. They went to FANG because everybody knows them and they're familiar with them. And I think that trade worked for like 12 weeks, from March through middle of the summer. I think now we're at the point where the market doesn't know what to do, but they're just sitting as a store of value. People are using Apple and Tesla and Facebook and Amazon as a store of value because they have more faith in it than they have. By the way, it's not irrational because you can probably trust Apple, Amazon, Facebook, and Google to print less stock than you can trust your own government to print fiat currency, right? So if you're actually looking for a store of value, then they were everybody's best idea, and you could punch the button and do the trade quickly with your prime broker. But I think as we look forward, I don't think they're the same trade and the same investment thesis as they were a decade ago.
Yeah, definitely.
Because everybody agrees with you. It's a crowded trade.
Yeah.
And you might be able to find good investments, but I think it's 100 times harder. Like when I bought Amazon at $300 a share when it had already crushed 15,000 retailers, and it was trading at 2 times revenue, and it was growing 20% a year, and everybody on Wall Street hated it. And it was unstoppable, $300 billion business, but you could have bought it at 1/10 of what it trades at right now. It wasn't a hard decision.
No, it was yeah.
All these big tech companies, they weren't hard. Apple, Google, Facebook, Amazon, they all had like 100 million to 1 billion users, and they were a monopoly, and no one was near to them, and they had economies of scale. Apple can ship a new product to 1 billion people in a weekend for a nickel. That was obvious in 2012. That was obvious with Facebook that they could actually change the way 1 billion people communicate in 2012. So there were obvious investments back then. I don't think there aren't that many obvious tech trades right now where you look at it and you're like, 99% of the world doesn't understand it. It's going to go up by a factor of 10. I'm going to buy this.
I have to mention, I initiated a mutual fund, and as soon as I heard the message that Microstrategy buys Bitcoin, I told my fund manager, buy Microstrategy. So we bought the shares of your company actually as a ETF on Bitcoin because we are not allowed to buy too much Bitcoin in Germany. So this is the second bet I made, and I'm really happy about it because it was like $120. Now we're way above 200. And yeah, I think that's what people can do. If they don't understand Bitcoin, if they're not able to buy Bitcoin in their country, they can buy a stock like Square. They invested 50 million in Bitcoin, or perhaps MicroStrategy or Grayscale.
Well, to be clear, we appreciate your support. Thank you. To be clear, my view on Bitcoin is the monetary network. It is Facebook for billionaires. No one ever brought 1 billion friends to Facebook, but people with $1 billion will bring every one of their dollars, or a large chunk of them, everything they want to save, to Bitcoin. And that means that it has all of the appeal of the world's greatest safe haven asset. It's better than gold. 10x, a million times better than gold, but presumably 10x the monetary appeal of gold. And gold's a $10 trillion thing, right? And I believe it's better than the sum of all the big tech companies. Put Facebook, Apple, Amazon, and Google together, and they're worth 5 to 10 trillion. It's 10 times better than that. And so it's the most compelling network. It's a technology network to collect, store, and channel all the liquid monetary energy in the world, stored over long periods of time with no power loss. It's an extreme engineering achievement. If you thought Facebook was a good idea, Bitcoin is 100 times better idea. And if you're looking for investment ideas right now, I would say there's 10,000 hyper complicated razor blades you can juggle. They're all complicated. And there's one obvious good idea. And the good idea is the world's first monetary network, right? And so anything that's tied into it, like Square's killing it, selling Bitcoin on Square Cash App. PayPal's going to be a great play tied into Bitcoin. MicroStrategy, we tied into Bitcoin, and that was helpful for our shareholder relations, right? But to be clear and to be humble, the big idea is there's $250 trillion of monetary energy being debased by fiat currency printing. It needs a store of value. It's desperately looking for a home. Bitcoin is a $350 billion monetary network. When $250 trillion tries to squeeze into a $300 billion pond, they have to go through a very thin nozzle. And that nozzle creates a positive feedback loop and a reflexivity that is going to drive the price of Bitcoin up. It's going to create more awareness, more intensity, more adoption.
This will happen in 2021.
Look, it's like I have an airplane pressurized, and I put a hole in the window, and all of that pressure is blowing out of the airplane. It's a wind tunnel. It's like it's like I'm in a school system, and all the kids are there, and no one ever goes to the playground. And a bunch of guys modeling say, well, the kids don't normally go out to play in the playground, and so I don't think they're going to go play. And then someone starts a fire in the school, and a fire breaks out. And the issue is, do you think the kids are going to run out of the school? Like right now, what we have is a situation of all the monetary energy getting sucked out of the fiat instrument system of the investment. So how long will it take before rational investors realize the energy is getting sucked out of the room? They're going to freeze to death. Somewhere between 1, 2, 3, 4 years.
Bitcoin is a black hole.
In that time, they're all going.
Bitcoin is a black hole. Michael, are you excited about any other technologies? Is there anything else? What you think this could be interesting in the future?
I think that this is the year of the virtual wave. And what's exciting about the virtual wave is you and I are talking, and you're thousands of miles away from me. And there are people that are going to listen because you've got the recorder on, and this might get played 100,000 times. So when you and I got a chance to bend time and space, once we finish speaking, 100,000 people might watch this on a Saturday evening or a Sunday afternoon. When they watch it, they can go down to that button in YouTube and they can speed it up and make it run 150% speed, and they can watch a 1 hour discussion in 40 minutes, and they can skip it, start it, stop it, and share it.
Yeah, it's
and when they share it, it might go to 4,900 people that didn't even know they wanted to watch the thing. And that's the virtual wave. If you can zoom anywhere at the speed of light and bend time and space, what are you going to do with that power? So I'm bullish. I'm bullish on any business idea or technology that is really tapped into the virtual wave, because the world, it doesn't want 10,000 people to do something manually in a mediocre way.
Yeah.
It wants one person to do it in a virtual way 1 million times a day. And so there's all these interesting things that are virtualizing, and it's a rise of excellence. And so if there's an offering, the world's best virtual something, or if there's a technology or a company tapped into it, I think that those have potential. Each one of them has to be assessed on its own merits.
Yeah.
And every good business idea is like, our business, we are virtualizing. So what did we do? We went from 2,500 people to 2,000 people. We cut our costs by 50 million a year on a $500 million basis. We drove our cash flows up by a factor of 5. Once we did that, we knew we were going to generate 60 to 90 million in cash flow a year. So we changed our treasury strategy. So then we went and we virtualized our balance sheet with Bitcoin. And then we went and changed our website. So our website has all these videos. And if you go to the website, you can watch the videos without meeting a person.
Yeah.
And we replaced sales, support, marketing. Instead of an army of salespeople to say the same thing over and over again, there's an array of videos that you can watch at your leisure that say it better for free, right? That's virtualizing. So companies that are virtualizing or can virtualize or benefit from that, they're interesting. As an investment thesis, you have to find the one that everybody else hasn't found already.
Yeah.
Right? Zoom is already well understood today. Investing in Zoom a year ago would have been a good idea.
Yeah, very good actually. Yeah.
Yeah.
I've got one question from the audience. My Twitter followers asked some questions. For example, Nicole asked...
Okay, and this needs to be the last one.
It's the last question. Yeah.
Okay, go ahead.
What do you think about Ripple or Bitcoin Cash?
Okay, well, I think that Bitcoin Cash and all the other forks of Bitcoin are failed experiments. They're all going to zero, to be honest with you.
Okay.
I don't think the world needs a cryptocurrency. It doesn't need a proof of work network to be a payment network or a payment rail. I think that the payment rails will be solved by PayPal and Square and Apple Pay and Google. And I think that the world does need a crypto asset like Bitcoin, and Bitcoin is 50 times better, 50 times more secure. So I feel like most of the forks will eventually fail over time. With regard to Ripple, I think it's a venture investment. It's not really what I think about cryptos in general are there 6,500 of them and all wanted to be an asset. There's only one that succeeded, which is Bitcoin.
Yeah.
I think that if these other ones find another niche, they might have a future. And so some of them try to be more efficient or faster or something, but I think most of them will fail because I think that payment rails will be dominated by traditional digital big tech companies like Apple, Google, Amazon, Facebook, Square, PayPal, etc. So it's very hard. You need to come up with, if you want to do a crypto, it needs to be something that requires sovereign immortality.
Yeah.
What is it that's so important that you want to put on a crypto network and transcend any company's lifetime or any country's lifetime? And money is. And maybe provenance, or maybe some special will or testament, or maybe license. Maybe there's something other than money, but I don't think anybody's found out what it is yet.
Yeah.
So they're all venture investments, and you got to assume there's a 99% failure rate, and there might be one thing that finds a niche that is a success. And if you go into it with the venture capital mindset, that is interesting, but none of them are appropriate as a treasury reserve network to actually put
Okay.
money that you want to keep.
Okay. Perfect. Amazing. Michael, thank you for your time. It was a pleasure. It was a really great talk. I hope you enjoyed it as well. I hope the audience did it. And I hope we'll repeat this soon in the future again when Bitcoin hit the new all-time high. And I wish you the best for the future. Stay healthy and thank you for your time again.
Thank you, Mark. It was a pleasure.
Thank you. Michael, take care.